Bismillahirrahmanirrahim. Today, inshallah, we are going to explain a short idea about the chapter 1 in cost accounting. The title of chapter 1 is the accountant's role in the organization. This chapter introduces a brief idea or background about the role of accountant in the organization. And what is the difference between management accounting and financial accounting in terms of a number of perspectives. This introduction is very important to students who are going to study the cost accounting coursework. The first point in this lecture is defining the financial accounting and what is the main scope of financial accounting. As we can see in this slide, financial accounting is focusing on external users, and also all financial statements under financial accounting should be prepared based on the rules and regulations of GAAP principles. What does GAAP principle means? GAAP principles means it's abbreviated for generally accepted accounting principles. These rules and regulations are more or common rules and regulations should be followed when preparing a number of financial statements, which includes the information about the organization, and the objective of this financial statements is providing useful and timely and relevant information to external users. On the other hand, management accounting is focusing on internal users and is not necessarily GAAP driven. In this point, I would like to focus on management accounting is not necessary to prepare their reports based on GAAP rules, because all management accounting reports, it is already for internal users for a number of purposes in the internal users, especially for the managers. And also management accounting or managerial accounting provides data for financial accounting. Also this include cost accounting, cost management, and also the link between cost management and cost accounting. Now, in this slide, we have at least 5 differences between managerial accounting and financial accounting in terms of a number of purposes. Number 1 purpose, in terms of perspectives. Number 1 purpose, number 2 primary users, number 3 focus, number 4 rules, number 5 time span. For purposes, management accounting or managerial accounting is helping managers make a number of internal decisions. Because this reason, we have to prepare a number of financial or managerial reports that have already presented to the managers at all levels in the value chain, to help them in making a number of short-term and long-term decisions. On the other hand, financial accounting communicates financial position, how to communicate financial position from our organization to the external users. We would like to inform the external users about our financial position to help them in making a number of decisions. This may include creditors, some governmental agencies, and investors and customers. These are external users who have limited access to the information inside the organization. Because this reason, we have to inform them about our financial position. Number 2, primary users, as I mentioned before. With respect to primary users, for managerial accounting, internal managers, for financial accounting, external stockholders or stakeholders. For the focus, managerial accounting is focusing on future-oriented has a future orientation because we are talking about the budget and how to prepare budget and how to prepare a number of internal reports which focuses on a number of future expectations and how to help organization in making a number of future decisions. On the other hand, in the financial accounting coursework, we already focus on past oriented because we report a number of past information in the financial statements that should be prepared to the external users. About the rules, in managerial accounting is focusing on cost-benefit analysis, how to compare between cost and benefit, how to compare between the in each decision we are talking about in the organization. We have to keep a balance between cost and benefit analysis. The benefits expected from such decision should exceed the cost of this decision. That is the ideology of the managerial accounting thinking inside the organization. But in the financial accounting, all financial statements should be prepared based on GAAP, generally accepted accounting principles. And about time span varies between period and period, but financial accounting should be prepared or annually or quarterly. But in managerial accounting, the reports should be prepared and introduced to the management based on the need for such reports and based on the decisions we are going to take in the management. The point of strategy and management accounting, this section is trying to make a link between strategy and management accounting. First of all, this point is defining what is the meaning of strategy. Strategy specifies how an organization matches its own capabilities with the opportunities in the marketplace to achieve its objectives and targets. Strategic management accounting is focusing on especially on the cost dimension within the all strategy. Strategy and management accounting also. Management accounting in the coursework for management and cost accounting help answer a number of questions inside the organization, such as who are our most important customers? Second, what substitute products exist? What is our critical resource? Will we have enough cash to support our strategy? Management accounting and value also. Management accounting is focusing also how to create value because creating value is an essential part of planning and how to carry out the strategy. When I plan and carry out the strategy, my objective in our organization is to how to create value, how to maximize this value inside the organization. Value also is the usefulness of a customer gains from a company's product or service. Value chain. Now, value chain, it is very important term in management accounting and management in a general. Management accounting also tries to define value chain. Value chain is the sequence of business functions in which customer usefulness is added to products or services. As we can see later, value chain has a number of sequences from thinking in the product about the research and the development function until how to provide services to the final consumers, which is called customer service or service after sale. As we can see in management accounting and value, the value chain contains a number of functions starting from research and development, number 2 design, number 3 production, how to produce the production to be able to market it, and this is the next function, marketing, and then distribution, and the final step in the value chain is customer service, or how to provide services to the final consumer after sale. Management accounting can provide information in each of these areas. The link between the value chain and the management accounting is that management accounting inside the organization can provide useful, timely, valuable, relevant information in each function for the value chain, starting from R&D, which is called research and development, until the final step is customer service, the service provided to the final consumer after sale. Analysis can be include also the supply chain. We are talking now about the key success factors, the dimensions of performance that customers expect and that are key to the success of a company includes cost and efficiency, quality, time, innovation, planning and control systems. Planning selects goals, predicts results, decides how to obtain goals, and communicates this to the organization. That is the brief definition of planning. What is the meaning of budget? The budget is the most important planning tool because it is a comprehensive plan about how to get resources and how to use such resources in the organization. In the management accounting coursework, we have to differentiate between operational budget, capital budget, and a number of types of budgets to be able to make a clear distinction between such types of budgets. Control takes actions that implement and carry out the planning decision and decide how to evaluate performance and provides feedback also to the organization. Management accounting roles: problem solver, scorekeeper, attention director. Management accounting guidelines. There are a number of guidelines in management accounting, such as cost-benefit approach, behavioral and technical considerations also should be taken into consideration in the management accounting guidelines, and the different definitions of cost may be used for different applications. In the subsequent chapters, we can see a number of definitions of cost and what is the definition of each cost may be used for different applications in the organization. Organizational structure and the management accountant. A typical structure might include CEO and the CFO, and as you can see, a number of positions under CFO. Professional ethics. The 4 standards of ethical product or ethical conduct for management accountants as advanced by the Institute of Management Accountants IMA. These professional ethics include competence, confidentiality, integrity, and objectivity. These ethics should be provided by the management accountant throughout his or her working in the